the reason why financial accounting is so important is, as a third person who, as an investor, okay, if you have invested your money in the company, see, you can't go and sit inside the company. Assume that you have bought Larsen and Toubro's company's shares, okay, L&T company's shares, or if you have bought Reliance company's shares, you cannot go and sit in the board of directors meeting. You cannot go to the company and say that I am going to open the gate. You can't say anything. The only relationship between you and the company is the shares. Okay. As you have bought the shares, the company will only give you the accounts of the company. Okay. Accounts also, not all the accounts of the company, only the required accounts, okay, which has to be shown by the company and which is like mandated by the government. Only those accounts has to be shown to the investors. Okay, so it's not that all the records of accounts are shown to the investors, only a part of it is shown. Okay, so financial statements are prepared to satisfy groups of people who have an interest in financial performance of the business. Okay, so these are the users of financial statements. Number one, owners. So owners are the shareholders. So shareholders want to know how much profitable the company is and how well it is run. There are also managers or the team of management or the CEO. So these people need to know the financial statements so that they can effectively plan for the future and see like what is the most proper way to develop the company. See, banks and financiers want to know whether the company can afford to pay the loan, okay, loan interest as well as the principal. Okay, banks are particularly are like interested whether the company will also pay back the overdraft. Okay, see, employees are also like very keen in understanding the financial statements, because if the company is like making a high profit, employees will also demand a high salary here. Okay, so if the company's financial position is very poor, employees will look at the financial statements and they can even switch over to another job. Okay, so if the company does well, they'll ask for a higher salary. If the company does very poorly, they'll try to move away from the job. See, suppliers also want to know like how well the company is, because the suppliers usually transact on credit. Okay, they sell goods on credit, so they want to know whether they can get their payment back. And finally, government is like very keen in knowing the financial statements, because they want to ensure that the company is paying the taxation properly and whether they are obeying the relevant laws properly. Okay, so that's about the uses of financial statements. So mostly the financial statement is prepared not for the internal part of the company, it's for the external part of the company. Okay, it's for the external people of the company here. So internally the accounts would be like different. Okay, it will be very detailed. Okay, and very month on month, week on week data and all will be like kept. But for the outsiders, okay, except for, see, managers are alone the inside people, but all the outsiders will not get the full true picture. They will get only a partially true picture, because the full true picture only the managers will know. Okay, so accounts is not a perfectly correct information, it's only an appropriate or approximate information. Okay, so that's about the uses of financial statements. We'll move on to the next one.